from the looks of things, it doesn't look like ICT's legit. Like, I think that's what trading is. Trading is a really expensive way to do introspective work. $250 to $14,000. The rules made me better. Like, it forced me to become a better trader.
There's no
There are
reason.
no payout denial. Yeah, there is no reason to. The cult following and the cult culture that they have, where I didn't want to lose the little bit, like I didn't want to crush the little bit of success and a little bit of hope that I had going for me at the time. And then I actually, bought a challenge with the firm, and I was like, wow, this is the best thing out. And
All right, ladies and gentlemen, we are back with another Funded Trader interview. My name is Tyler Davis here with FunderPro, and I am talking to my man Bryce TV. Bryce, how are you doing, my friend? How are things going?
I'm well. Hope everything is great on your side of the pond.
Things are going well. Things are going well. I caught a good NAS move today, so it's always a good day when you catch a winning trade, right?
I caught gold sell, so I guess we're both in a good mood.
There you go. That's what you like to hear. 100%, 100%.
Nice.
So anyway, to kick things off here, why don't you just tell us a little bit about yourself, how long you've been trading for, how you got into trading, maybe a little bit about what you did before you started trading, and the viewers get a chance to get to know you a little bit.
All right. Yeah. So my name is Bryce from New York City, 27 years old. I've been trading since around 2016. So it's kind of like I say my trading story is kind of fate, because I had a friend. I had a homeroom friend in high school, and after we graduated, he invited me to a multi-level marketing event for Forex, right? It wasn't iMarkets Live, right? In New York City, there were a lot of other companies around at the time, but he invited me to the event, and he ended up not going. But that's how I got my preliminary info. That was my first introduction to Forex. So I got onto baby pips from there. Got a little bit from the interview, from the meeting. Heard about baby pips, made my first account with FXCM, which is now Forex.com. At least their American entity, which they go by now. And yeah, that's just how my journey started. So just MLM event, baby pips, MLM event, baby pips, and then it's making my first broker. And then it was a lot of on and off of trading after that. So like, I was in college at the time, and I was working fast food jobs. So I'm trading, working fast food in college, trying to do it all. But I was just consistently losing money. I'll be honest. Like, that's how it was in the beginning.
Sure.
I'll say from around 2016 to around 2019. I was just taking consistent losses, doing the same thing. Then I was watching YouTube throughout that time, and I had found a YouTuber named Jay Take Profits. She's actually still around today. But I had joined his IML group. I was just looking for some guidance out, and he's someone I resonated with on YouTube. Why not join his little group and pick his mind? So I was in his group for 3 months, and I met a guy in there who kept talking about the 50 EMA strategy. Kept talking about the 50 EMA. So again, more on this later, but that's when I first heard about the 50 EMA strategy. About a year goes by, I kept losing. So now we went from 2019 now into 2020. COVID hits. I had graduated school. By that time, I was in school for computer science, and I went to a little coding boot camp. So I graduated for that. But then once COVID hit, there was like a little hiring freeze. I had a lot of time. I was sitting at home, and just decided to hop back on the charts again. And except this time, I tried the 50 EMA strategy. I said, I'm going to take a different approach, not just trade this blind price action. I don't know what I was doing back then. I think I was trading just price action. I think I had some Bollinger Bands on the chart. Yeah, I don't even remember, but like most traders, you just tried a whole bunch of things until something stuck. So I tried the 50 EMA. And this is when I had like my first big break, so to speak. I followed a YouTuber named Tyillionaire. He went by Ty. He had a video called 5 to 1,000. And I watched that video. I was super inspired. So make a long story short, I connected with them on Twitter. That's how I got my Twitter presence, and that was my introduction to Twitter as well.
Mhm.
And I flipped 250 to 14,000, and then he did an interview with me. Something maybe not as
Wow.
official like this, but it was a nice little breakdown on how I did it. I was trading
So you're
GU
two
NASDAQ.
hundred two. I'm sorry, I didn't mean to interrupt you, but $250 to 14,000. Is that what you said?
$250 to 14,000. Right.
Dang, man,
That was
that's a nice account flip right there.
yeah. And that was like my first ever win at the market. It's my
Okay.
first ever win. And I did a little
How
interview
long did
with
that
him.
take you?
2 days. 2 days.
Holy
But again, full disclosure, I lost much of that money shortly after that.
Mhm,
So the
mhm,
success was short lived, but it was my first taste that success. It was a like I can do this moment,
mhm.
right? I was looking for, like I said, I was trying a bunch of things until something stuck. Finally, something clicked, the 50 EMA. So I ran with that, and it just felt good. So I'll say that was my structured approach. I think I definitely the game got more serious then.
Yeah, you have to start once you get into the prop firm space, you have to start kind of adhering to their rules a little bit, right? When you're trading your cash account, you can full port it, you can do whatever you want. Once you get to the prop firm accountants, kind of forces you to structure things a little bit more in your trading. I think it helps a lot of traders who start getting in, who maybe are struggling on a cash account, but they get into the prop firm account, and you have those rules that are now in place, and you kind of have to learn. All right, well, I better reduce my size. I better manage my risk a little bit better here. It kind of helps you and forces you into that a little bit, I think.
Right. Yeah. And I say that a lot, like that the rules made me better. Like it forced
Hmm.
me to become a better trader. I never really had a plan before. Like I said, I barely remember what I was doing. It was a lot of just pattern recognition. I had like those chart pattern cheat
Hmm.
sheets, bearish
Double tops,
engulfings and
double
stuff,
bottoms, yeah, bull
double
flags,
tops,
bear
double
flags, yeah,
right. And I
ascending
and I thought I
triangles.
knew what I was doing.
Yeah, yeah, sure.
I thought I knew what I was doing, but
Uh-huh.
then again, I ran into similar roadblocks again, failing to replicate that account flip, failing to get funded. It was a real struggle trying to really like find a system, really paying attention to the details on how to replicate what I did previously in a
Mhm,
more professional environment.
mhm.
And yeah,
So
that was, go ahead,
so you said you started in 2016, so you've been, going at it, almost, 10 years now, and
almost.
you said it was about 3 years in when you started to find a little bit of success. Was there one thing or a couple things maybe that you would attribute that kind of success to? Was it just the experience? Did you start, changing your bad habits? Did you start journaling your trades? Did you start having a more structured routine? You hear a lot of these different things on social media from people that are giving out trading education. Was there any one or multiple things that helped you get over that hump to start finding some success?
I would the key detail was just adding that 50 EMA to the chart. And I
Hmm.
think that just gave me just the concept of not trading against the trend
Hmm.
and actually having an indicator that forces me to see it, forces me to not ignore it, right? Like this is it. If above this line, buy, below this line, we're bearish. And it just simplified things for me. So if I could just attribute it to just to put it in a few words, I'll just say keeping it simple, right? The
Hmm.
50 EMA kind of just simplified this big pool of resources for me. Is that's just what stuck. So I just went with what worked, and I think I developed. I started to notice some patterns from that, right? So yeah, I
Hmm.
guess there was some experience. It's a combination of using those chart patterns, seeing how things play out just from a pure price action perspective, and then adding the 50 EMA, only going with the trends.
Hmm.
Something about that relationship just pushed me into the right direction. I mean, don't get me wrong, I still blew some accounts and I still took some losses,
Sure.
but it was definitely a tipping point where I had something to work with.
Hmm.
I didn't
Hmm.
feel lost anymore.
Yeah. Okay. So the combination of experience, kind of finding your strategy that worked for you, all of that sort of playing out and coming together. Let's dive into the 50 EMA a little bit more, and your strategy and how you use it. So you said you like to trade with the trend. So you're looking for price action to be trading above the 50 EMA if you're looking to go long, and you're looking for price to be trading underneath the 50 EMA if you're looking to go short. Is it, if at a simple, the simplest terms, is that the way you trade?
Right. For the simplest terms, that's the way I trade. And there's one more indicator I use, which I think is even more important now. I picked this up along the way as well, the stochastic, right? So I use the 1433 stochastic. It's I, I was introduced to the RSI at first. To me, it's a more reactive RSI.
Okay.
And I've noticed that there's a real connection between that 1 hour and 4 hour overbought and oversold levels on from the 80 and that 20 line with the 50 EMA, right? You can even back test this yourself. Just throw the 50 EMA on any chart, throw the 1433 stochastic, and watch how price is usually overbought and oversold on the same time frame it's bouncing off of the 50 EMA on. So yeah, that relationship just is just a pattern that I picked up on, and that's what I've been running with. So the 50 plus the stochastic.
So okay, so you use the 50 EMA, and you said the 1 hour and the 4 hour. Are those like the two main time frames for you? Do you use any other time frames, or just the
So
1
all
hour and the 4 hour?
so all of my analysis starts top down. I always start from the weekly and the daily. That's where I'm marking up my key levels and zones, and then my executions will happen on the 4 hour and the 1 hour. Some occasionally I'll go to the 15 minute, but there's a lot of stochastics give false signals in trending markets, and the lower time frames you go, the more chaotic it is. So I try to keep it on that 1 hour. I think the 1 hour is that perfect balance. If you can correctly predict the direction of the day, and all you have to do is find out where that high and the low of the day is, and usually there's a double bottom or a double top on an hourly or a 4 hour. Really, usually the hourly is where it's clean,
Yeah,
and that's what I've been running with.
if you said to me you can only trade with one time frame for the rest of your life, it would be the 1 hour. I think that's
Same.
the best chart if you only could pick one, in my opinion.
Yeah, I'm with you there.
But that's cool. I do a similar thing. I start with the weekly chart, the daily chart, kind of work my way down. I'll use smaller time frames for my entries, and I use the hourly chart for my support and resistance levels as well. But so that's cool. So you like to trade then off of the EMA itself. So you're not looking for price to be trading far above the 50 EMA, and you're not looking to short back to the EMA. You're looking for the price to be trending up, so we're making higher highs, we're making higher lows, and you're looking for a potential higher low off of the 50 EMA for an entry. Is that how you like to find your entries?
Right. Yeah. So at first I was only going with the trend, but I've learned now to experience has showed me that I can counter trend trade, right? There are some times where that 1 hour and the 4 hour are just way overextended. You get a nice tweezer top or a nice hanging man or something, and we can take that nice sell or a buy back to the 50 EMA, back to the mean, and those are nice plays too.
Yeah. Okay. That's cool. So you use a little bit of discretion in your trading, where you'll just kind of see which opportunity is presenting itself, which is cool. Which asset do you like to trade? Do you like to trade gold? I can't remember if you mentioned that or not.
Yeah, so it evolved, right? So like I said, in the beginning, I was trading a lot of Forex pairs because all I knew was Forex. Then when I met in 2020, when I did that little tie with the 5 to 1000 thing, he was trading US 30. So that was my
Okay.
introduction into indices. And then recently, within the past a year and a half, 2 years, I've been trading gold.
Okay.
I was always scared of gold. Gold was always crazy at first, but I got a friend who cracked a little bit, and I've been learning from him. So
Got you in on it. Yeah. I think when you're new to trading, sometimes that volatility keeps you away, and then the more experience you get, you kind of look for something that gives you a little bit more volatility. Once you get that experience a little bit, you like to see that price move a little bit more.
right.
So you told us you learned your trading from the YouTuber with the 50 EMA strategy. You let us know kind of the time frames you use. Now, in terms of style of trading, are you more of a intraday trader, more of a swing trader? How long are you normally holding your positions? Is there a specific session that you like to trade? Do you like to trade New York? Do you like to trade London session, Asian session? How do you go about those things?
So I'm typically an intraday trader.
Mm-hmm.
I'm rarely holding a trade. I'm never holding through the weekend, and I'm rarely holding through the end of the day. There may be a time I might if there's a really nice swing,
Mm-hmm.
but yeah, it's really rare. I like to get out before market close and just reevaluate.
Yeah.
So
Yeah.
yeah,
Sleep,
and I typically
sleep
try to
peacefully.
focus on. Say that again.
I said sleep peacefully. When you have a position on
Right.
overnight, sometimes you're up all night checking the chart. You know what I mean?
Yeah, sleep peacefully, enjoy the night
Mhm.
peacefully without just that just paranoia of always checking the phone. Exactly. I could relate to that. So yeah,
Mhm.
it's just closing the charts at 5. But I do trade Asian sessions sometimes. This is actually
Mhm.
a bad habit I'm trying to kick now. Like sometimes the market rewards you for bad behavior, and I
Mhm.
caught some wins sometimes during Asian session, but statistically I'm not very it's my least profitable session, so I'm
Mhm.
trying to stay away from it now. I actually recently did some back testing. Like I just went on TradingView and I threw up the sessions indicator to break
Mhm.
down break down the different sessions, and I noticed that the gold move that I'm typically looking for happens at around London Open, around like 3
Mhm.
3 or 4 a.m. Eastern. And
Mhm.
then the moves I'm looking for on the indices either happen at 8:30 when some news comes out for pre-New York, or
Mhm.
at 11 after 11 when London closes. So
Mhm.
those are like my kill zones out. So I'll keep it at like gold for London, and then indices for at around New York.
Okay. I so very similar to you in that sense where statistically speaking, I do not trade the Asian session very well, and I have definitely done that before where I'll just like paper cut myself to death during that session because it's you can get choppy and I'll just hold positions too long, whatever it may be. So I've tried to stay away from trading the Asia session. But there is a London session trade setup that I really like, which is I kind of noticed that when London opened, which is 3 a.m. my time, same as you, that when London opened, it would often push one way first. And then, 15, 30 minutes, an hour in, it would then reverse. And once it started to reverse, it would continue trending that direction until New York opened. And I recently saw some statistics on this. So the London 15-minute orb double break. So you have the opening 15-minute candle. It will break, and this is on indices. I trade NASDAQ, SPX, US 30, but specifically on NASDAQ, the 15-minute London opening orb has a double break nearly 80% of the time. So what I'll look is I'll wait for that first 15-minute candle in London. I like to see it break either below or above it. If it breaks below, I'll then look for longs targeting the upper end of that 15-minute range. If it breaks above first, I'll then look for shorts targeting the lower end of that 15-minute range. And that's been a good win rate strategy for me that I've used. And I've seen a lot of other people talk about it similar. They explain it a little bit differently, but essentially they're trading that same thing. So that's I don't think it's shocking to hear that we both do similar things in that sense. I think that's
Right.
how it goes sometimes.
Right. I'm not surprised either. But I have a question for you as a
Mhm.
fellow trader.
Yeah,
Um, so how much R do you typically target? Because this is a really tricky thing for me now, and I'll get into a little bit later. But how much R are
sure.
you looking for typically?
So in terms of like a risk to reward
Right.
type of thing, so I look to trade a high R multiple. I don't know if you've ever read the trading book, but by far my favorite trading book is Best Loser Wins by Tom Hugard. And he explains something in that book. He doesn't necessarily believe in the risk to reward argument. He feels the only thing that you can actually control is your risk, and you really don't know the reward that the market can give you. And his trading strategy, which I have adopted into my own trading as well, is he adds to his winners. So he takes an entry on a trade, it starts to work in his favor. He will then average in to make his average price worse, and kind of just adjust his stops to kind of like manage his risk as he does that. And he likes to be in the market on a trending day, and he likes to add to those positions on pullbacks. And sort of the whole concept of that book is like, okay, when you do this, a lot of your winning trades will turn into break even or small losers or whatever it may be. And if you can do that while controlling your emotions and not letting that send you on tilt, the days that you are able to do it and the market does give you a nice trending move, you really can make a killing. So the hard part with that kind of style of trading is being patient through the slow markets. But if you're able to capitalize without blowing yourself up when the market gets trending in one direction or the other, it can be an extremely profitable strategy. So I say all that to say that like I'm normally looking for like a minimum of like a one, like risk 1 to make 4, but sometimes even more. And I like to add to my winners, and I'll hold for trending moves. So yeah, that's I 1 to 4 is kind of like my standard that I'm looking for. But I also don't like to like be set on and like, okay, if it hits 1 to 4, if it hits 1 to 5, I'm taking my profit. I'm definitely done. My trading styles, I'll like to see what the market will give me. So, but yeah, I'm not a scalper. I'm normally holding positions for 30 minutes to multiple hours, but I am an intraday trader in that sense where I'm not swing trading. I'm normally trading with prop firms. Obviously, FunderPro, we do have the swing trade account, but I mostly trade intraday as well. Use like the swing accounts just because of the protection with the news events, or you like the option to be able to hold over the weekend and then the evening? Is there, you just like a little bit less leverage? Is there a reason why that you like the swing accounts the most?
Yeah, so my average trade hold time is about an hour.
Mm-hmm.
And like I said, sometimes I'll get in at around like the pre-New York time, and I might
Mm-hmm.
want to hold through that NFP news or whatever. Like
Mm-hmm.
I've held through NFP and CPI.
Mm-hmm.
Like I'm personally not afraid of that.
Mm-hmm.
Um, and yeah, a lot of the times that volume takes me straight to TP. Right? I mean,
Mm-hmm.
sometimes it doesn't work out, but a lot of times it
Sure.
does. And I just need that flexibility. It'll be something also like a trade will be good. I just want to hold it for a couple of
Mm-hmm.
hours, but I just wasn't aware, or just it might slip my mind if there was an FOMC minutes
Sure.
or something, right? So just
Mm-hmm.
to eliminate any of those, 'cause I was trading with my Forex funds
Mm-hmm.
before they went down, or before
Yeah.
the MetaTrader
Mm-hmm.
chaos and all of that. So I'm used to being able to hold through news and not have to just worry about anything. And the swing
Gotcha.
account was just the closest to what I was used to.
Cool. 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 So before we move on, you had asked me my risk to reward, which I would say is different than most traders. But what is your strategy when it comes to risk to reward and that sort of thing?
So yeah, it's evolved over the years. I used to so when I first had that when I first heard of Forex, I heard of the risking 1 to make 3. Right? So
Mm-hmm.
3R was always my standard.
Mm-hmm.
And then I was catching extremely high R trades during COVID. I was even doing some crypto 10R, 20R trades, and again, rewarded for bad behavior. I started to develop an appetite for that, and I blew a lot of accounts and went on a lot of losing streaks trying to chase things that just weren't realistic. Little did I know. And now I'm starting. So my recently my last live account was with I did a 1-to-ones. I did 30 pip 1-to-ones trading golds. That was something
Mm-hmm.
new to me.
Mm-hmm.
The high R just didn't work out for gold all the time.
Mm-hmm.
Like you said, you have to find a way to survive those choppy times. So
Sure.
that's how you do it. You do it with the 1-to-ones. So I was just,
Mm-hmm. Take it as
taking what I
basic. Yeah.
could,
Mm-hmm.
taking what I could. But now I'm in this awkward phase where like I want to trade high. Like I don't trust my discretion. To make a long
Mm-hmm.
story short, sometimes I see the 1-to-one, and then it runs for the 3, and then I
Mm-hmm.
just second guess myself. I overtrade. So now I'm thinking of sticking to just a hard 2R.
Mm-hmm.
Hard
Mm-hmm.
2R, risking 50 pips to catch 100 on
Mm-hmm.
indices, 50 points to catch 100 on the NASDAQ is just simple for me.
Mm-hmm.
And, 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 I heard a quote one time that said you can only make 2 or 3 good decisions a day. And if you're a
I've heard that.
trader, and if you're a trader taking multiple trades, you're burning through a lot of your mental capital just from
Mm-hmm.
trading. So just to have more non-negotiables in my system, only looking for buys above the 50 EMA, always looking for 2R, only trading after 8:30. That eliminates a lot of the thinking from my strategy. Less decisions to make, less room for error. So to answer your question, it's evolved over the years, but I'm consolidating at around a 2R now.
Yeah. Yeah, that's great. And I think you make a good point there is there's no right or wrong answer to that question, in my opinion. I think traders, especially new traders, if you're listening to this and you're thinking, what strategy should I use? Which way should I trade? It's really about understanding yourself and what works best for you, right? Because I know me personally, like it mentally drives me more crazy when I close a position and then I watch it run without me for the rest of the day. And that will lead me to tilt because then I'll start chasing it and chasing it and
Right.
chasing it. So like for me, I know the way I'm built, and it's like I'd rather give back some profits and eat a stop loss that's still in profit, but try to let this bad boy ride and see what it'll give me. And I've just learned that over the last 3 years of trading that works better with my personality. To where somebody like you, it's just maybe better boom my risk one to make two, take it, lock it up, and that's great. And I think uh, it's a very big variable in trading because your risk to reward combined with your win rate is really what will decide if you're profitable or not, right? And
Right.
so it really comes down to knowing yourself as a trader. And for an example for you today, though, I'll toot my own horn a little bit because I see in the background that Nasdaq is still pumping. I took a trade today that was the London orb trade that I was telling you about, and so it was at I entered the trade at yesterday's low on Nasdaq, and I'm still in the trade. And we've now completely erased yesterday's candle, and we're making new highs on the day here towards the end of the day. So,
Mhm.
and and there's plenty of times where I've given back a lot of profit, but like I just have to be willing to accept that as a trader because I know, listen, this is the way I trade, and I need to stick to that system, right? So if
Right.
you're watching this, that's kind of my message to you. You got to learn what works best for you and your personality, and roll with that.
Right. Yeah, it's a lot of that's a good point. I always ask a lot of like my friends or any newcomers is like the first question you need to ask is what kind of trader are you?
Mm-hmm.
Right? That's going to
Yep.
determine what strategy you should be looking into, what time frames you should be looking at, maybe even what pairs, right? Some pairs work
Mm-hmm.
better for different people. So again, all of
Sure.
that, just knowing yourself, knowing yourself. I think that's what trading is. Trading isn't a really expensive way to do introspective work.
Yeah, that's it. That's for sure. If you want to get to know yourself, start trading. You'll find out everything that's going on in your head. Absolutely.
Right.
Um, so let's see here. A couple more questions for you.
For
I
sure.
asked this question to somebody yesterday, and I don't know what your thoughts will be on this because it sounds like you keep it relatively simple, the 50 EMA strategy, price action. But a popular polarizing figure in the trading and specifically trading social media space is ICT.
Hmm.
And he talks about the holy algorithm that he may or may not have coded. I don't know. I've never watched any of the ICT videos, but you see it everywhere, right? So just curious, what are your thoughts on ICT, on the algorithm, and that whole hype around ICT? What are your thoughts there?
Yeah. So a lot of the people that so a lot of people that I heard about FTMO from in the
Hmm.
beginning were heavy smart money traders. So I
Okay.
heard a lot about all of these smart money concepts, and the one that I the one that resonated with me the most was order blocks and breaker blocks. right? Or just the last opposite candle before a significant move upward, right? We got a big rally up. That last red candle, just draw a little zone, extend that to the right. When price comes down to retrace, it's probably going to come back down to that order block or a breaker block, whatever you want to call it. That's one thing that I've learned that checks out. And I like the concept, right? I haven't, I don't disagree. I don't agree with the cult following and the cult culture that they have, where it's like, oh well, you're trading retail and we're trading smart money. That was a big thing in during COVID, where it's like you're looking at the market wrong. There's a right way to look at the market,
Yeah, sure.
and all of this type of stuff.
Yeah.
That's where and it's no real knock to him. I mean, like, I haven't immersed myself in the content. I'm not sure if that's how he
Mm,
teaches it, to say
mm,
that he's looking at things right, smart money is right, but that's how it
mm,
came across to me. But again, I like some concepts. I like some
mm,
concepts. I just don't like the cult following around them.
yeah.
Recently, I'm heavy on. You mentioned earlier that you saw me on X.
Hmm.
There's been a lot of controversy with him with this Robbins Cup.
Oh yeah,
He's
I've
been
seen some of
going
that. Yeah.
He's been going at it with I believe the guy's James Wyland on YouTube. He's like
James,
big
I think it might be Wieland, but yeah, I
feelings.
think so. Yeah, 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 yeah.
Apologies.
Patrick Wieland, I think.
Patrick, there we go. Patrick Wheelan's right. So he's been going back and forth with ICT, and from the looks of things, it doesn't look like ICT's legit. Like from a
Mm,
trading credibility perspective, there's a lot of red flags
sure.
around his credibility. But
Mm,
again, that concept of the order blocks resonated with
yeah.
me. I combined that. I used that along with my 50 MA and my
Mm,
stochastics, and that's pretty
mhm,
much it. I don't really have anything to add other than that. Just
yeah.
any beginners out there, just don't fall into this idea that you're looking at the market right and someone else is looking at it
Mhm,
wrong. A
yeah.
million ways to make money in this game.
100%. It's very well said. There's a million ways to make money in this game. There's an argument for a trade in either direction to be made at pretty much any point in time during the day. And you could be right, you could be wrong, right?
Mm.
And so I think most of the people, I think, kind of agree with that. This kind of the statement that you had there was, um, they will pull, 2 or 3 ICT concepts that they like from all of his teachings and implement that into their own trading style. That seems to be what I hear, pretty often from traders. So it's interesting to
He's
hear.
even said it. He's even said it himself. He said you don't
Hmm.
need to watch everything,
Hmm. I mean,
right?
you
You can
can't.
make
It's
a
just too much.
model.
Yeah.
Right, and his style is right. His style is very overwhelming. You'll be there forever. In I'm I'm in software engineering too. They'll call it tutorial hell, like where you're just watching a whole bunch of tutorials and
Mm.
you never build anything. You'll be there watching a whole bunch of videos and trading, and you'll never, nothing will really stick because you're not
Yeah.
applying it.
Yeah. Sure. You need that experience as well.
Right.
Um, so I guess 2 more questions for you that I can think of. The first one would be, if you could go back to the beginning of your trading career and give yourself any piece of advice when you were starting out, what would you tell your younger self nearly a decade ago?
I would tell myself to slow down.
Mm,
I would tell myself to slow down and to develop and to come up with more non-negotiables.
mm,
A lot of the rules that are non-negotiable to me now were
yeah,
ideas I had back then that I just never implemented. I knew I shouldn't have been trading every session. I knew the high R setups were statistically inconsistent. But it wasn't until I developed hard rules where I'm not going to trade at this time. I'm only going to target this amount of pips per trade, fixed risk, etc., until I started to see some progress. So yeah, I would tell myself to come up with stick to those hard rules early, because that's what
mm,
discipline really is. Discipline is just doing it. It's just
yeah,
coming up with those rules and doing the same thing every day, and there's nothing to it but to do it for real.
and sticking to it. Yeah, and discipline may be the most important part of anyone's trading. So
Yeah, it is. And I think discipline is contagious. I think it spreads to other areas of life, right? There's people talk a lot about, the body follows the mind.
Mm.
Get your mind right, you'll get your fitness right, you'll get your finances right, make your bed in the morning. All of these things kind of go together. You just feel better, you feel confident in just everything you do. Yeah, it's just all those type of things. Even doing the things that you tell yourself you're going to do, right, develops trust, right?
And
I'm going to
yourself,
stick to
yeah,
this risk,
yeah.
right? Because if you keep saying the same thing and then you don't do it, then eventually, like, you don't trust yourself. Like, you're like,
Mhm,
yeah, I don't have to stick to my rules. So I don't have to stick to that plan. So that's just something I just said in jest. That wasn't serious, right? So
mhm.
you don't want to lose confidence and lose faith in yourself by just breaking these rules. So yeah, I'd say discipline.
Yeah,
Stick to discipline. I'll remind myself the importance of discipline, having non-negotiables, and trading less.
yeah.
Trading less.
The most successful
That's what I'd
traders
say.
I know trade less than most any other trader I know. They're picky, man. They pick and choose those spots. They know when to be in the market and they know when to stay away. And that's impressive because I think that's the hardest part to do for any trader. I think if most people really look at what's holding them back in their trading, it's doing everything exactly like you just said. They don't have the discipline. They make a trading plan, they don't stick to it. They make a
Right.
risk amount that they're willing to lose, they go over it. They tell themselves they're going to take 3 trades a day. They revenge trade with 10 trades a day. So like, I think those are the things, and those are the reasons why most traders fail. And yeah, I think you put it beautifully when you said that. So
And it's really all psychological, right? All of those reasons, there's it's something else is underlying that you need to address, right? And this is what I
mhm,
was saying that trading exposes. Why are you over trading? Because you're greedy, right? Why are you revenge trading? Because you're impatient, right? So like and these are qualities that show up in other areas of life and
mhm,
dig us into deeper holes into so many. I mean, one thing for me was I used to get to places late a lot, right? I used to not, and I had to realize like, okay, well, I gotta, if I'm not sticking to the set time for here, well, then of course I'm not gonna trust myself to stick to a set time in the market, right?
mhm.
Everything is just up in the air.
Yeah,
And you kind of can't have you need to have a structured plan. You need to have that, or else the market's gonna throw you all over the place.
I totally agree. I think that's a big part of it. That the sooner traders who are just getting into this realize that and really implement that into their daily lives, the better. 100%. So my last question for you will just be: I want to get your thoughts on your experience with FunderPro, trading with FunderPro, and what you like about it, what you dislike about it. Just give me kind of your thoughts and feedback on your experiences so far.
Well, I'm actually a FunderPro affiliate. I love so much that I decided to partner with the company,
Yeah,
and yeah, like, so I love FunderPro. I think FunderPro is the best. They're the best. I think they're the next FTMO. I think FunderPro is the new FTMO, and I think people just don't realize it yet, right? I mean, I
yeah.
know a little bit about the business behind the scenes. There's a lot of structural differences to FunderPro that a lot of other firms just either don't have the capital to implement or just don't care to implement. And like from the daily payouts, that's a that's an unprecedented feature, right? Nobody
Mhm.
has that, and I think that's a testament to how the business is run, and how like the consistency rule keeps the business sustainable. It
Mhm.
ensures consistent and fast payouts for everybody. I've never had a delay for a payout. Like, and it's so crazy. People see me on Twitter and it's like, oh, he's just yapping about he's just copying and pasting his affiliate link because he's an affiliate or whatever. And there is some truth to that, but there really are no denials from Funder Pro.
There's no
There are
reason to.
no payout deny. Yeah, there is no reason to, like that, and it's
Yeah.
not. That's not a lie, right?
Yeah.
So that's what, and I sensed that from the beginning. Like, at first, I was looking to start a prop firm myself. Realized I wasn't ready for it, so I decided.
Mhm.
So I went the affiliate route, and then
Mhm.
I actually, bought a challenge with the firm, and I was like, wow, this is the best thing out. And I think the cherry on top is Trade Locker, right?
Mm.
When the entire industry was uncertain about how we're going to move forward past meta
Yeah.
quotes, Trade Locker was right there. And there was a little bit of bugs at first, but everything's been perfect since then. FunderPro #1.
That's it. That's it right there. FunderPro #1. That's what we like to hear. That's what I like to hear right there. Well, shout out Bryce TV, my man. Thanks for taking the time. I appreciate everything you had to say, all the knowledge you had to drop. Like you said, we're really a trader first prop firm. We want to put the trader first. When we get those withdrawal requests, we want to see them. We're excited to hit accept to process that withdrawal, because when our traders get paid, we get paid. So those payouts come from the market. There's no reason to ever deny them, right? So, but thank you again for taking the time. I think all your social media handles are just pretty much at Bryce TV, right? BRYCE TV.
At Bryce TV1. Yeah,
At Bryce
at Bryce.
TV1. Okay.
Yeah,
All
I
right.
couldn't get Bryce TV on Twitter. I mean, on Instagram a long time ago, so I just kept it Bryce TV1 on everywhere, pretty much.
There you go. Well, hey, you're the one and only, baby. The one and only. So that's it,
All
man.
right.
Thanks for taking the time, man. It's super good talking to you. Nice meeting you
Nice to meet you, bro.
in person, and hopefully we'll get to connect again here soon.
All right.
Thanks, man.
Thanks.
Have a good evening.